If we were sitting down over coffee and you told me you were thinking about buying your first house, the first thing I'd say is this: that's exciting! And also, slow down just enough to think clearly. Buying your first home is a big deal. It's emotional, it's financial, it's long term, and most people focus on the fun parts: the kitchen, the backsplash, the backyard, the paint colors. But the smart decisions happen way before all of that. So let me walk you through the 10 things I'd want you to think about before you sign anything. Number one, your budget, the real budget. When you talk to a lender like Rocket Mortgage or a major bank, they'll tell you what you qualify for. That number is usually higher than what you should actually spend. Why? Because they're calculating based on debt to income ratio, purely numbers, looking at your income amount and deciding what debt would be comfortable for that income. You, however, need to calculate based on your peace of mind. You ask yourself, can I comfortably afford this payment? Can I still save money each month? Can I handle an emergency without panic? You don't want to be house rich and life poor. Number two, think monthly payment, not just purchase price. The sticker price is only part of the story. Your real monthly cost includes the principal on the loan, interest on the loan, property taxes, insurance, HOA fees if there are any. Sometimes a home that looks affordable on paper becomes tight once everything is added. I always tell people, imagine paying that number every month for the next 5 to 10 years. Does it feel stable or does it feel stressful? That feeling matters. Number three, understand your loan and interest rate. Interest rates can quietly change your financial future. A 1% difference can cost you tens of thousands over time. You might look at conventional loans or FHA loans through the Federal Housing Administration or VA loans through the U.S. Department of Veterans Affairs if you qualify. Each has pros and cons. Lower down payments sometimes mean mortgage insurance. Adjustable rates can look good now but adjust later. So just understand what you're signing up for. It's not about finding the perfect loan, it's about knowing what the trade-offs are. Number three, location. The one thing you cannot change. You can redo floors, you can remodel a kitchen, but you can't move the house. So always check the quality of the schools, the crime rate of the area, the commute time to and from work, and nearby development. You should use tools like Zillow or Redfin to look at trends, but also make sure you drive the community during the day, at night, on weekends, during rush hour. How does it feel? Does it feel stressful, congested, or is it calm? Location drives long-term value more than almost anything else. Number five, never skip the home inspection. I don't care how competitive the market is. Know what you're buying. Remember that a home inspection checks the roof, the HVAC system, plumbing, electrical, foundation. Keep in mind that a roof replacement could be $15,000. An HVAC replacement could be $8,000 to $12,000. An inspection isn't just about finding problems, it's about understanding future costs. Remember, you're not buying a Pinterest board, you're buying a structure. Number six, think about resale, even if you say this is your quote, forever home. Everyone says they're buying their forever home. However, life changes. Jobs can move, you can have more kids, you can have kids leave the home, there might be different opportunities. You might want to downsize later on. So ask yourself, is the layout functional? Is it at least, say, 3 bedrooms? Is it at least 2 bathrooms? Is it in a desirable area? Those are the types of questions you want to ask. You don't want to own something that's hard to sell later. Future you matters. Number 7, how old are the big ticket items? This one sneaks up on people all the time. For example, how old is the roof, the AC unit, the water heater, the electrical panel? If everything is 18 to 20 years old, for example, you're likely going to replace things soon. A good rule is plan to save about 1% of the home's value every year for maintenance. For example, for a $300,000 purchase, plan to save about $3,000 every year for that maintenance. Owning a home is amazing, but it's not passive. Number 8, if there's an HOA, read the rules. HOAs can be great or they can be restrictive. You should check the rental rules, the parking rules, the exterior changes rules, and any special assessments. A 300 monthly HOA fee is $3,600 a year. That's real money. Make sure the lifestyle matches what you really want. Number 9, property taxes and insurance are not static. Taxes can go up after you buy. Insurance has been increasing in many areas, for example, Florida, or any other place that has hurricanes, floods, or wildfire risk. Make sure the numbers you're seeing are realistic long-term numbers, not just today's estimate. And finally, number 10, what's your 5-year plan? This might be the most important question. Are you staying 3 years, 5 years, 10 plus years? Buying usually makes sense if you plan to stay at least 3 to 5 years because of closing costs and transaction fees. But you should also think, could this become a rental one day? Would it work for a growing family? You don't need a 20-year plan, just a direction. So let's summarize with this. It's okay to love the house. Just make sure you love the numbers first. If the numbers work, the location works, and the long-term plan works, then you can enjoy the granite countertops guilt-free. Buying your first home shouldn't feel like pressure. It should feel like a step towards stability and options.